Okay, Thursday, market close June the 11th, 2020. What a meltdown we've seen today. We've seen the Dow Jones has dropped 7%, down almost 1,900 points. We've seen the S&P 500 down 6%, and the TSX down just over 4%. This is a meltdown that we kind of anticipated coming, and we can speak to that in a minute. That's why we took some action last Friday. But let's talk a little bit more about why the market is having such a massive sell-off as we go into the weekend. It'll be very interesting to see what happens in the market tomorrow. Well, first of all, number one, COVID-19 still exists. I was thinking the other day about how here in North America we're seeing the flattening of the curve, especially in Canada, which is great to see in many parts of the United States as well. But I think what's not catching enough attention here in the news feeds in the US and Canadian markets is the massive impact COVID-19 is in having some major economies in other parts of the planet, namely in Brazil. You want to talk about global supply chain issues. Brazil is a major supplier of agricultural distribution for things like soybeans. And so there is going to be a major impact on the supply chain for major big global producers of foods, goods of foods, as well as materials. And so even if we see things really calm down here in North America, where a lot of goods are not produced, we have to pay attention to what's going on in the emerging markets, where there's still a lot of production that gets shipped into the United States market. Of course, there's massive protests happening in the United States. Here's something that's interesting. Just down south of us, 3 hours south of Vancouver, is Seattle, and they have now declared a self-governing autonomous zone in Capitol Hill. I've been to Capitol Hill. It's a nice area, and it's apparently free of any police officers now too. So we'll see how that pans out over the next coming weeks. And of course, we're still seeing strained relations between the US and China. So that is going to definitely have an impact going forward. So there was what was often being described as a melt-up effect that was happening over the last couple of weeks. And we started really focusing on this in the middle of last week. And come Friday, we were sellers. We had an over-concentrated position with some of our bank stocks. So we were selling CIBC and National Bank, not because we don't like the companies, but we just simply saw these shares being run up very quickly, especially on the backdrop of still a major global pandemic happening. And we know the banks are hoarding a ton of cash right now, so their profitability numbers in the coming quarters could come into question with the massive amount of cash that's sitting on the balance sheet not being lent out into the market. So on Friday, we were a seller of CIBC. The stock price went up on Friday. It was up even further on Monday. We were a seller also on Monday. But just to give you an example of how important active trading is in a market like this, we were a seller at $98.72 roughly, and the stock today closed at 92.5. That's a 6.5% drop from our sell activity on Friday to what the valuation is today. Now, we weren't buying back in today because I think there's still some more negative days in front of us. By contrast, we have National Bank. It closed on Friday at 64.14. It was even higher on Monday. We were seller on Friday, we were a seller on Monday, and here we are today, stocks down at 60 bucks, avoiding again about a 6.5% drop from the Friday close. So my point here, folks, is for you to think about your portfolio in the context of both the active management and passive management. I often use the reference of Peter Lynch and Warren Buffett. Of course, Warren Buffett is a tried and true investment strategist and has proven himself to be very, very good at creating wealth over many years. He uses the philosophy of it's not about timing of the market, but time in the market. We believe in that for a certain portion of our clients' portfolio. All of our clients know there are certain holdings that are going to be held there for a very long period of time, what we call our permanent hold positions. But then there's that Peter Lynch style of buy low, sell high. We believe right now we're going to continue to be in a range-bound trading activity where we're going to have some peaks and some valleys, and it's going to basically be a band that the market's going to trade in. And this is your opportunity, if you can get on the right side of the trade, to buy low and sell high. And that's what we've been doing the last couple of weeks. We'll see how the next couple of days go. We'll have more update for you as things unfold. Thank you.